Let's get ready to rumble!
Senior Nation jam-packed show today. Peloton up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Nia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley is the CEO of Akerna, the best trade idea resource out there. Yo, what's up, everybody? Happy Thursday! Woo! We are coasting and cruising through this week. What is going on, everyone? It is time for the Power Hour. That means it is time for your trade idea resource. Let's get rocking and rolling, guys. The whole point of the show, the reason why we spend these 60 minutes together every single day is we want this to be the place that we all have to find ideas. Let's jump to some stocks in a second here, but let me give you a little bit of a preview for the day. There we go. The chats are flying in. Y'all are ready to roll. I'm ready to hit it. We're running a couple minutes behind today, but now I'm ready, okay? On the list, Tesla Ford options trades. We made them live on the show last week. We've been checking in on them every day. We will go to the live brokerage account and look at those. We lost producer Rohan, but we were going to do user calls at the top as well. That might not be happening anymore. And then I have a new stock. I have a new stock. I'll give you a hint. I have my second and third Celsiuses of the days in my right and left hands, respectively. It's not a stock that we've dug into yet, but we plan to. So I actually haven't looked at the ticker yet. I figured I could do the research on my own, or let's take some time and look at the stock together, and we will dig in there. All right, I see producer Rohan coming back. We might be able to get away with some user calls. Let's throw the number on the screen. Basically, what this means, I'm going to start off with the first two stocks that I wanted to talk about. Well, the phone number's up there, guys. The line is yours. Call in 2 minutes. Pitch whatever stock you want, okay? That's the whole point. This is the Trade Idea Show. We are out here listening to the people. We have an air horn, and we just lost it. But you have 2 minutes to pitch whatever stock it is that you want to talk about. All right. And we didn't even talk about Doximity. Guys, fresh IPO today, big IPO, $4.5 billion valuation, $600 million raised. Doximity, ticker DOCS, Delta Oscar Charlie Sandy, is going to be going live, making its debut as a public company today. And so we're going to be talking to the CFO right at 12:30 Eastern. And my guess is that the stock may be opening while she's live on the stream with us. The stock hasn't opened yet. The IPO priced at $26 per share. The latest indication that we have, guys, if you see my trusty Benzinga Pro, is the stock is indicating $36 to $37 per share. So I would expect the stock to come out with sometime while we're on the Power Hour together today. So that would be a blast, right? How fun would that be if we have the CFO on the show while the stock opens? All right. So that's what we're going to be looking out for. But all right, phone number is on the screen, guys. If you want to dial in 2 minutes to pitch whatever stock you want. First thing that I want to do, let's look at Tesla. I'm not going to go through the whole trade again, guys, but Tesla 5.6% day. Oh, I don't have an air horn. All right, we went synthetically long Tesla last week, live option trade on the show. What we did is we sold the 550 strike puts for $5.40. Basically, when we do that, we get cash credited to our account right away. The risk that we take on is we might have to buy shares of Tesla at some point in the future. So I'm going to zoom us in to the live interactive brokers account. You can guys see, look at we are short the puts, right? So that means that when it's a red day, that's good for us. Okay, red is green when we're short it. Third column in here, that's our unrealized profit on the trade. So we're up 47% so far. We have a We have another week. Let's see how many days exactly. So we have 8 days to expiration. So we could be in this thing for another 8 days. If Tesla has another monster day tomorrow, another solid green day, I would expect that our unrealized profit is going to jump somewhere into the 70s range, 70 to 80% range, at which point we'll go ahead and close the trade. We made 70% of everything we can make on the trade, so we're going to close it out. I love selling puts on stocks that I'm okay buying, all right? That's the deal. We sell puts all the time on this show. It creates some nice income. I mean, I make a couple $1,000s a month just by selling puts. And the risk that I take on is that I may have to buy shares of the stock for some price that's lower than what the stock is already trading at. Okay. That's why I'm okay doing it. The other option trade I want us to look at is Ford. For Ford, we did something a little bit different. We sold covered calls against the stock position that we own. All right. So let's zoom it in. So here are 3 open Ford positions on the screen right now. Okay, again, all live trades we made on the show. We bought the underlying stock. That's doing nicely. We bought the long dated calls. That's doing even better. And then what we did last week is we sold calls against the stock position that we own. And basically what we're doing there is we sell the calls. We get more of that income. All right, hold on. I need some Celsius. We sell calls. We collect some income from selling those calls. And the risk that we take on is that we might have to sell the stock position for a higher price in the future. So far, we've made 76% of everything that we can make on this trade. We have 1 day left to expiration. The stock is going to expire tomorrow. I'm just going to let that ride, take the extra 2 cents. The odds that Ford makes a run from $15 to $16 right now is pretty slim. If you guys followed me into this trade, you can go ahead and close it out. Take the 76% upside that you have. I'm just going to let it go, mostly because I'm lazy. All right. So there's the move there. And producer Rohan, do we have any dialers? I've been hearing the phone ringing.
Yep. We actually have Ruel on the line.
Oh, baby. Let's go. And I'm going to put on my main man, Drew Levine from the Benzinga team is here as well. Ruel, what is going on, sir?
What is up, Luke? How you doing, man?
Good, man. How about yourself?
I am great. So, part of the reason I'm on here is to pub our show, for sure. The Ruel Report every Monday. Over stock and crypto.
Boom.
Little shameless plug. But the stock I'm on for is J as in Jack, R as in Ruel, E as in Earl.
All right, JRE. So this is the Janus Henderson U.S. Real Estate ETF. So we have an ETF play. Is that right?
Yes. So it's a brand new ETF. A lot of the REITs have been popping off since, we got the vaccines and everything. And I just wanted to look at a really good way to play these and not be exposed to just one REIT. And that's one of the things that I came up with.
Okay. Do you know this REIT or what's in it by chance? But we can take a look.
No, I don't.
Quick.
It's brand new. It literally was released, I think, yesterday.
Yeah, wow. I don't even see the Janus page for it yet. All right, so it's brand new. And basically,
literally it was released yesterday.
Okay. All right. There's a couple trades on it today, so they're making a little bit of headway. But all right. So let's talk through this play a little bit. This pitch. Basically, you have a thesis on real estate, specifically a bull thesis on real estate, and you're looking at this new ETF, JRE, Juliet Romeo Echo, as an avenue to get into it.
For sure. And if you look at all like lately, that whole sector, the whole REIT sector has been trending. Like you got stuff like AHT, like Ashford, and all these different REITs that have been trending. So I'm looking at trying to just play the sector as a group, as opposed to getting an Ashford and all these different, all these different REITs.
All right. I like it. Drew, any opinions on this one?
Yeah, I would say, I mean, we don't really know what's in it, so we're kind of shooting in the dark here, but real estate is hot. The market is kind of at an interesting point, so just kind of, I'd say, get understanding for what you're getting into.
Shooting in the dark is the best way to shoot, all right? So, all right, Ruel, appreciate you dialing in and dropping us the first idea of the day, guys. We had time for 2 more calls. 2 more times. The floor is yours.
Thanks,
Producer
guys.
Rohan, can you get the phone number back on there, please? Let's get this phone number up. Let's get some more stock pitches from Zinger Nation, all right? So there's the phone number up on your screen now. And guys, I'm gonna make an ask. First ask I'm making of the day. I'm a needy guy, okay? Let's pull it in. All right, YouTube. You have this gray thumb here. Hit hit that little thumb. Looks like this. Turn it blue. Share the stream, and of course, as always, you are all invited to dial in and pitch a stock to it. Jim Stocks to say, and you guys never answer my calls. Well, that's probably because you dial too slow, man. We have one phone line, okay? So there's no radio station with 99 lines, and they're like, caller 84 is winning the free tickets. We have one line.
Hey, Luke, we got someone on the line.
All right.
Jim?
Who are we talking to?
Yeah, this is Ron.
What's going on, Ron?
Not a whole lot, Mr. Luke. We got some stocks moving today, though.
All right. What are you looking at? What's on your radar?
Well, Mr. Luke, I'm looking at John Deere, ticker DE.
All right. Ron is in the house, baby. We got that in the chat. All right. You're looking at ticker DE, Delta Echo, John Deere, famous green tractor company. Give us the pitch on this one.
Well, I see Mr. Black on the screen there has got a picture of what looks like to be some cannabis, and that's part of the reason I like this stock. I think John Deere will be in the cannabis cultivation game. People talking about Sundial and all these smaller companies, but I like John Deere here.
All right. I dig it. I dig the John Deere play, ticker DE, as a cannabis stock. I'm going to throw this one out to Zinger Nation. Let's make this the first question of the day, guys. We're voting on it. If you guys like John Deere, ticker DE, you have to pick one way or another, all right? This is active participation we are calling for. Hit the 1 if you like the stock. Hit the 2 if you don't. I want to get a sense as to where everybody is at with this thing, all right? 1 if you like it, 2 if you don't. John Deere, you have to pick one way or another. Again, Ron on the phone lines, Ron of Zinger Nation. His pitch on the stock is he views it as a cannabis play. We maybe get some federal legislation, and then we have all these new production houses. So, and Kathy Wood likes John Deere too. I think that's actually in her space ETF.
That's what I was gonna say. It's going to space. But
all right.
If you're playing it as a cannabis play, I'd say probably a little bit diluted there for how big of a company this is. $100 billion market cap.
I totally agree with that. I don't think cannabis can be a catalyst.
What did you say?
I agree. I mean, how much? I mean, let's do some quick math. I mean, maybe it is.
No.
All right, we're gonna do some bullshit math right now. All right.
That's
Guys, phone lines back up. We're taking one more call, one more stock pitch from Zinger Nation. Be that last one. But all right, let's look at the sales that they do per annum. So I'm going to look at trailing 12-month sales. We have 4 quarters. That sums to $38 billion. All right, so let's start off with $38 billion. There's $38 billion. Here, I'm going to open up an Excel file.
I would say Grow Generation, GRWG, just bought a few more shares of that actually Tuesday or Wednesday. And that's my cannabis play.
All right, so here's your $38 billion, okay? All right, estimated tractor. Let's take a percent of that. So 1% lift in sales from cannabis. Let's take 1% of $38 billion. Okay, so now you're looking at $380 million. Estimated tractor price. Call it right now. How much? I'm going $2 million.
How much you think?
$2 million.
I will tell you it's around 100,000. I mean, matters how big, but it looks like it's around 100,000.
No way. All right, I'll put 250,000. There's no way it's 100,000, dude. The Tesla's 100,000.
I mean, this is like a smaller tractor. You know, this isn't the one with all the glass and like the 17 wheels.
All right, I'm going 250K. If somebody in the chat actually knows, drop it in there. John Deere tractor price, I'm saying 250K. Tractors for 1% sales lift. Let's look at it. All right, here's drum roll. I mean, they would need to sell 1,520 tractors at my 250K. All right, we have people in the chat who know. All right, so we have 65K, 400K, 350K, 225K. All right, we're gonna put an average price per Zinger Nation again. This is bullshit math, guys. At 300,000, so that means that they need to sell 1,300 tractors for a 1% lift in sales. Let's change this to 5% if they wanted a 5% lift in sales. Oh, how do we do this math? Oh, we just hard coded it. All right, so if they wanted a 5% lift in sales, then they would need to sell 6,300 tractors. I mean, it's a lot of tractors to move. But all right, there's Ron's pitch. Producer Rohan, do we have anybody else on the phone lines? We do have time for one more pitch from Zinger Nation.
No one yet, but feel free to call in.
Jesus Christ. It's like sometimes we do this and we get so many calls that it goes for the whole hour. And sometimes it's, everybody's just hanging out and doesn't want to go out there like I have to every single day trying to bring some ideas. We had their 2 good options trades. Yes, the Ford one was small, but we're going to make a nice G off that Tesla trade. Hopefully by end of day tomorrow. Stock is still going. All right. I want to get a quick gut check of where everybody's at on Tesla. Tesla, obviously 2 monster green days. These are daily candles that we have up on the screen now. Stock is still way off of its high of $900. We're at 700 right now. If you guys like Tesla, drop me a 1 in the chat. If not, drop me a 2.
Hey, Luke, we got someone on the line.
All right, let's hit it. What's up?
Hey, it's Dan T from Canada here.
What's going on, Dan? You said Dan T?
Yeah.
All right, Dan T. What do you got?
TTD, the trade desk. They just recently split. I think it was like $600. It's down to like 60. I think it climbed up to 70 something today. Last time I looked.
Woo! All right. Do you know what the company does? Is this the is it like a CAD play?
Yeah. It's like those ads that follow you around on the internet. Like if you go look at like Ford's website or Toyota, you'll be getting Toyota ad. Yeah. It's that kind of company. They do ad analytics, but recently they split. So, it's kind of like it's a new game with that split there.
Okay. All right. And so are you getting action on the stock off of the split? Or are you in it because of the core business? I mean, where are you at with this one?
Yeah, I mean, I just saw an opportunity. This one's a little bit of a longer one, but even in the short term, analytics is only just getting better. And I think Google did. There were some recent changes, and it's going to affect businesses like this. But like, it's also like MG&I, Magnite, and TTD are kind of the same kind of analytics business. But MG&I is kind of an up and comer to TTD, who's been kind of established for a while.
Okay, I like it. Any sort of thoughts? Like how are you managing the trade right now? Do you have a price that you're looking for? Where are you at with it?
I'm pretty long on this one, so this could be a long swing, if not potentially a longer.
And were
term
you in
investment,
it pre-split?
But in the short term, no, I jumped in it because of the split. My buddy told me about it. I was like, yeah, sure, I'll buy 100 shares of it and just sit on it for a while. And it's already looking all right. The day it went down to 60, I jumped in there. So I think maybe it could probably go to $80 in not too long here. But yeah, it looks pretty good. I mean, do some research on it. You can definitely catch any sort of movements using Pro because you guys are on it there. So
yeah,
that's
baby.
fantastic.
pro.benzinga.com. If you haven't tried it, today's the day, okay? All right, Dan T from Canada. I appreciate you calling in and dropping a stock idea.
You too. Cheers.
All right. Drew, let's take a look at this one, and then let's run a quick recap. We're gonna do 3 stocks, 3 minutes, talk through the ideas that we just got from the dial-ins. But TTD, Dan T, he likes this one off of the split. It looks like we have the split announced on May 10th. And then let's see, it's the 24th. The stock isn't up on the split. The stock is up because Google said that they're going to delay stripping cookies out of its browsers until 2023. Huge news from the space today. So I thought this 18% run was due to the split. No, the 18% run was because of the Google announcement. Let's go back to May 10th and look at when the company announced it was splitting. I mean, it's got to be great. Okay, so yeah. 47 to 77 since that split was announced. Okay, so Dan T has had some really nice action in the stock, up 64% since making that split announcement, guys. When a stock forward splits, it is not uncommon at all. You can almost expect that you're going to get some positive share price movement off of that. And then today, the big Google announcement, Google previously said that they're going to be removing cookies out of browsers this year. They now delayed that to 2023. And so, huge boost for all advertising businesses, Benzinga included. I have my air horns back. Can I get my air horns back, please, producer Rohan? He cut me off, Drew. Yeah, I got cut off.
I know. Maybe you gotta ad lib that.
Okay. There we go. All right. So Drew. Drew and Zinger Nation, okay? Everybody in the chat, you have to participate. There's no sitting on the sidelines, okay? We just heard from three members of the community dialed in to give us their stock pitches. First, we had ticker JRE. That's the real estate ETF. Second, we had John Deere, ticker DE. That is the cannabis play. We ran our BS math on this. And came to they need to sell 6,300 tractors to have a 5% sales lift. Again, it's quick math, okay? And then number 3, we had ticker TTD. That's the advertising play post split, post Google announcement. Where are you at? 1, 2, 3. Put them in the chat. Which one do you like the best? 1, real estate. 2, John Deere. 3, TTD. I want to get a sense of those 3. I'm number 3. This Google announcement is monstrous for the advertising industry. I mean, it gives them so much more room to run for so much longer. They basically turned it from where Chrome wasn't going to be a play for digital advertising anymore, and now it is. Momentum on TDD is amazing. The chart is beautiful. We had a nice steady climb. We're sitting right at this previous high here. We clear that high. The next high that we have is what is that? 80.5, 81. So if I'm picking, Drew, I'm not buying into any of these. We already went over the stocks that I bought at the top of the show. But if I had to pick, I'd be number 3.
Yeah. I think I like Trade Desk. I honestly have to do more research. I didn't really understand their business model beforehand. I've heard the name here and there. But it's something I definitely want to do more due diligence in. So thanks for giving me. I'm taking that as a stock pick. Always learning from Benzinga. Pretty crazy stock moves this week, and looks like we're going to keep heading in that direction until Friday. So stay tuned. Watch the show. Drop us a like, guys. We really need those likes.
Share the stream. And all right, let's go. We have a big interview, all right? Huge IPO today. Doximity, ticker DOCS. Anna, the CFO of the company, is going to be joining us in just a minute, guys. If you're just joining, this is the Power Hour. This is the Trade Idea Show. I'm cracking my 3rd of 3 Celsiuses of the day right now. So I'm giving you a hint as the stock that we're going to be talking about in the second half of the show. So stay tuned. Drop the tickers that you're trading in the chat. And let's go ahead and bring Anna on. All right. Doximity, huge IPO that we have going on today. We are joined by CFO Anna Bryson. Anna, how are you doing today?
I'm great. How are you? Thank you so much for having me.
Absolutely. Huge day for you. Huge day for the company. Amazing what you guys have done, what you've built over the past several years. I got this note from our producer. It says, keep Anna for 10 minutes flat. So let's just jump into it. And for anybody who doesn't know, can you just give us a little bit of the background of the company to get started?
Yeah, of course. So Doximity was founded about 10 years ago, and we're the leading digital platform for medical professionals. Our members include over 80% of all US physicians, and we really provide them with digital tools that are built for medicine to make their lives more productive and efficient.
Awesome. And Anna, the stock has not opened for trade yet, correct?
Correct.
It could happen during these next 10 minutes.
You might get me live.
We might get you live. Okay, that will be a viral clip, guys. Again, ticker DOCS. We are waiting on the open. Priced at $26 a share. Last indication that I have is in the 36, 37 range. But all right, Anna. So the network for doctors. I know that you guys are also making a big telehealth play. Could you talk a little bit about that? The current monetization versus, is there a move into telehealth, or are there other aspects of the business that investors should be excited about? Give us the rundown there.
Yeah, of course. So for telehealth, we sell a software tool similar to Zoom, and we're selling it to health systems. And we brought it out during the pandemic and to enable our physicians to reach their patients when everything else was shutting down. So we started selling our telehealth about a year ago. And it's definitely something that's a steady revenue stream for us. I think the more exciting opportunity is that healthcare is an industry that's long been very under-indexed on digital spend, and it's in the midst of a digital transformation. And we see that occurring across the board here, whether it's our telehealth business, our hiring business, or our marketing business. And so we just think we're going to lean in and see a lot of organic potential here.
Awesome. And so Doximity boasts 80% of physicians on the platform. I mean, that is a monstrous number. I mean, that was when I saw that number, I was looking through some of the investor materials. I thought that I was looking at a wrong number. So like 80% of doctors have computers. Like, I'm like, is that what it is? Like it's a market size play, but you have 80% of physicians on the platform. Can you talk about what the value add is for them to join, how you were able to obtain such a big number? Any insight there?
Yeah, we were very glad to pull them away from the fax machine. That's really like our main goal here. It's taken time. We've built the trust of the physicians over time. Like I said, it's founded in 2010, and we've really been focusing on continuing to increase our offerings to them over time. So we provide them with a news feed where they can stay up to date with the latest medical news. We provide them with productivity tools so they can call their patients or send e-faxes. And we've just created this platform that's really digitizing their careers. And doctors, in a similar way to the whole healthcare industry in general, has just long been working with pretty antiquated technology. So we're trying to help make their lives more productive. And we're very, very proud to have over 80% of all US doctors on the platform. And we're also very proud, one of the things we're really excited about today is a directed share program for our physicians. So we've allowed our physicians to participate in this offering, and
awesome.
We have over 10,000 physicians participating.
Wow, amazing. That's an awesome stat. In terms of the end game for you guys, right? What you're building towards, you alluded to it a little bit, but could you make it more tangible for us? I know you talked about sort of digitizing the medical world and the world in which doctors live. Is it to become sort of that complete operating system for the medical world? Is it communication specific? Is it for hospital systems, for small clinics? But I would really appreciate if you could take us through what the end game is and what exactly you guys are building towards.
Yeah, of course. I mean, the physician's at the core of our mission. So everything we are doing is physician first. We're very, very focused on, as I said, making their lives more productive to provide better care for their patients. So our aim is to continue enhancing our current technology and enable them to just do more virtually and do more from their pockets, really pull out their smartphone and make that phone call, look for that job, read the news article to keep them up to date with the latest medical news that they need to actually do their job. So we're just trying to centralize everything and continue to enhance our offerings for them as I said, to make them more productive and efficient.
Awesome. And so let's jump into the numbers a little bit. So from 2019 to 2020, sales grew at somewhere around 80%, 116 million to 207 million is the number that I saw. Can you talk a little bit about the composition of that revenue growth?
Yeah, and as I mentioned originally, healthcare is an industry that's long been very, very under-indexed on digital spend, spending much less than most other industries are spending on digital channels. And what this last year has done is it's really allowed a lot of healthcare systems to adopt that digital strategy, because we were all digital this last year. None of us were in person, and so we saw that digital transformation start to take place and really benefited. We think the healthcare industry did 3 years worth of shifting to digital in 1 year this last year, and we saw tremendous success there.
Yeah, that's amazing. It's so similar to our space, right? Being, we're the stock market for the individual investor. That's what we're out to solve. And it's like COVID kicked off a trend that was inevitable. And Anna, we're running into 3 minutes. Still no open. Let's see. I'm hoping. Okay, I'm trying to will it into being.
You tell me. I'll hear it from you first.
I don't have a bell, but I do have an air horn. So if you hear the air horn, that's what it means. Okay. And you've been at the company for about 4 years. I imagine that it was an incredibly smaller firm when you joined. Can you just talk a little bit about your journey and the firm's journey over the past several years?
Yeah, of course. So I joined 4 years ago, as you mentioned, and you're right. It was a much smaller company. And, one of the things that's impressed me the most about Doximity and that, I like the most about working here is just how mission-centric the company is, and how over time we've grown our employee base by at least 5x since when I first started, yet we're still that same company that has the physician-first mission. Our culture is critical, still work with a lot of the same people from 4 years ago when I first started, which I think really is a testament to how strong of a culture we've built. And yeah, it's been a remarkable journey, and we're really excited for this next chapter.
Awesome. And you're at the New York Stock Exchange right now, correct?
Live from a boardroom, so I apologize for the background.
Okay. Did you get a little New York Stock Exchange medallion?
I have not gotten a medallion.
Okay, I've been lucky enough to go to a few IPOs, not Benzingas, we're getting there, but a few. You should be getting a medallion, so make sure that they didn't, cut that out of the COVID budget.
Oh, I will start asking everyone.
Exactly. And then a last question I have for you, for the investor community, what should we have next on our radar? What should we be looking out for and paying attention to from the company?
Yeah, we're just, like I said, really focused on embarking with our customers on this digital transformation and focusing on leading into our organic opportunities here and continuing to put the physician first. That's our mission at the end of the day.
Awesome. Well, and I appreciate you taking the time out of your day to join us from your New York Stock Exchange boardroom, guys. The company is Doximity, ticker DOCS. CFO Anna Bryson on the Power Hour live with us. I have to respect my note from producer Spencer, otherwise he yells at me and makes me feel bad about myself. So we're at our 10-minute time limit. But an amazing job with what you've built, what you've done, and wishing you the best of luck as a public company.
Thank you so much, and thank you for having me.
Absolutely. All right. How about that one, guys? Bringing Drew back onto the stream with us. Very interesting company, the social network for doctors. It's absolutely a digitizing of medicine play. It's absolutely a telehealth play. I'm going to throw this one out to the chat, guys. The stock still hasn't opened for trading yet, so you can't buy it. I saw some comments in the chat, saying, hey, the chart isn't loading. The chart's not going to load. Okay, the stock hasn't started trading yet. There's nothing to load. I'll show you what the chart looks like. I have it pulled up. I was waiting. This is what the chart looks like. Okay, it's just a blank box until we start getting some quotes fly through here. But all right, guys, throwing it out to the chat. Third question of the day. We're surveying the audience today. One, if you think that you like the stock, you're going to be a buyer. Two, if you're going to be sitting on the sidelines holding out. I'm curious where it is. And shout out to Born Be Free in the chat. He's saying that's as hot off the press as you can get. That is so true. That's what Benzinga is out here doing every single day for our community. Air horns on that one. Yeah, I mean the stock hasn't even started trading yet. So, all right, we're hanging out. Drew, give me your quick take. And guys, if you don't know Drew is our college trader. All right, he's been with Benzinga for a couple years now. Stock market junkie in the truest sense of the word, on all the discords and the Reddits and the things that I'm already aged out of for using, and maybe you guys are too. Drew, give us the takeaway.
Yeah, I mean, look at Teladoc, look at Zoom, look at all these other competitors, I guess, in their space. They've rallied. So I think this stock has got an awesome, track record. It looks like they've been doing well themselves, and I think the industry is going to keep growing. It's an interesting time for them to IPO for sure, right? Kind of coming to the end of the pandemic. A lot of these, tried to go public maybe beforehand, but I think it's a great opportunity, right? Valuations are a lot more fair. People kind of know how to judge these companies better. And, I think I could be a buyer myself. What do you think, Luke?
Yeah, I mean, I think it's super interesting, right? I look at the medical field very similar to the space that we live in, the stock market space. Drew, you might be thinking, what are you talking about, Luke? Are you on crack again? The answer is no, Drew. Okay. So here's how. I think that they're both spaces that have been very, very slow and late to adapt to technology, right? I mean, when did the rest of the world have their internet moment? It was like 1998. The fintech, it had it in like 2015, right? When I opened my first brokerage account, which is about a decade ago, I had to go into a branch to fill out physical paperwork. Right. The world has transformed so significantly in that sense from the finance side of things. And I view the medical world as the exact same place. Right. I have two parents that are eye doctors. They still come home with stacks of papers. My dad now has to put stuff into the computer. His solution for that is that he writes his notes and then reads them out to a human being who then types them into the computer at the end of every day. Right. I mean, talk about a place that's slow to adapt. I see Andre in the chat is asking, what about IPO statistics, Luke? Let's talk about those. Okay. A ton of academic research has been done on recent IPOs. There's two trends that I think are most interesting to pay attention to as you're thinking about buying into IPOs. Generally speaking, IPOs outperform on their first day of trading. Right. And I think a lot of that is due to initial public offerings being underpriced. Right. We're looking at Doximity right now as an example. We see that the IPO priced at $26 a share. Right now, it's indicated to open at $36.37. So there's a 30-40% jump right there. So there's trend number one. Trend number two is that generally speaking, stocks underperform over their first year as a public company. Right, IPOs underperform first year as a public company. So let's look at Facebook as an example. I think this is a great one because it's a stock that a lot of people know. Here's a 1 year chart when you go further back. What year was Facebook when it broke? Wow, 2012. I can't believe it was that long ago already. Holy crap, Drew, how old were you in 2012?
I was 12.
Damn. I used to always be the youngest guy in the stock market business, and I'm definitely not anymore. It sort of sucks.
I had to hop in here. I don't want you guys having all the fun without me. We got Matt Hammond in the chat, IPO warrior himself, saying Dox is indicating opening at $39.50, in between $39.50 and $40.50.
All right. Matt Hammond is our resident IPO expert here at Benzinga. So Dox, that's looking like a really strong open. But all right, let's talk about this Facebook IPO, guys. What we're looking at right here is monthly candles at around the time when Facebook debuted as a public company. If you guys remember, Facebook broke the NASDAQ. You remember that? Drew doesn't remember it. He was 12. Producer AB was 15. He also doesn't remember it. The rest of you maybe remember that with me. But there was so much volume trading in Facebook on its first day that it shut down the NASDAQ. And worse than shutting it down, it was not a complete shutdown on the NASDAQ. What happened was the NASDAQ shut down, and then they got it back up, and it started accepting orders, but it still wasn't sending confirmations back out. Okay, so think about this. You're sitting on your Thinkorswim trading this thing. Okay, you keep sending order, buy, 100 shares, 100 shares, 100 shares, and you just see all your orders as pending. Nothing's getting through, so you keep sending more and more orders trying to get one of them to fill. They were actually filling, but the confirmations were not making it back from the exchange to the brokerage to the user. And so all of a sudden, you had people who tried to buy 100 shares of Facebook owning like 45,000 shares. And they don't have the cash to cover it. So now their brokerages are screwed because they have to put up the money for those shares because the broker is the one who sends the order in. right? I mean, it was an absolute cluster.
Wow,
Yeah,
I didn't even know that.
Facebook famously didn't do well after the IPO. I think we got Damon in the chat saying it was $17. Then I think it went all the way down to 12 or so. And
look, we have the chart up, AB. And that's the point we're making, right? So some of these hot companies really underperform in their first year. So Facebook, it looks like we had an open around 42. 4 months later, we're down to 17s. And then how long did it take? So
maybe that was the low, 17. But it wasn't until Facebook changed how they were monetizing their users till the stock really started to take off. And that's kind of my catalyst on some other social media companies we have right now, like Snapchat and Twitter. Facebook and Twitter both, or not Facebook, Snapchat and Twitter both have huge user bases, but like Facebook early on, have been struggling to kind of monetize that massive user base. So the bull thesis there is, like Facebook, eventually Twitter and Snap will figure out how to monetize their user base and then be able to take off like we've seen Facebook stock do.
All right, I want to throw this one out to the chat, guys. This is off schedule, but because we're talking about least favorite social media stock, drop it in. Least favorite social media stock: Facebook, Snapchat, Twitter. What else is out there? The Chinese ones. Drew, give us more of these. Come on.
Baidu. That's kind of like Google, though.
All right, least favorite social stock. You used to have LinkedIn. That's now snapped up by Microsoft.
I mean,
mine is Twitter.
Twitter's historically been like a dog, but
Twitter can't figure out how to make money.
But they will. They will, Luke. They will figure
Here's
it out.
a chart of Twitter back to 2013, the Twitter IPO. It took us, how many years is that? 8 years to get back up to where the stock was at. Let's look at the revenue per our trusty Benzinga Pro. So Luke, there's revenue growth, right? So they just posted 1 billion. Here, I'm gonna zoom it in. This is quarterly revenue for Twitter. All right, we had another $1 billion quarter back here. I mean, we had a 900. I mean, they've had such a hard time figuring out how to make sales at this company and really monetizing its user base. From the customer perspective, we've been a long time. We've tried advertising on Twitter like 1 million times, right? Like 1 million times. We've tried advertising on Twitter. We find that Facebook works. We find that Google search ads are the best out of everything. Google search ads work the best. Twitter, we just have never been able to get an ROI on, and we've tried so many times. And we pretty much got advice from Twitter's ad group that said, use Twitter ads to buy more Twitter followers, basically. Just advertise for more followers rather than try to sell your product, because we couldn't make it work. We're like, well,
there's also rumors
that
Reddit is supposed to IPO at some point.
Yes, it is.
I'm not sure, what the monetization of that will look like, but Reddit's one that I think will continue to grow. So that will be interesting if that does occur, if Reddit goes public. That's one that I will have my eyes on. And then Luke, I was recently reading a study about companies that are led by their founders. So founder-led companies have historically better returns. What are your thoughts on that?
I get it. It makes sense. Because founder-led companies are not led by professional managers, right? There's a very clear distinction between a founder and a professional manager. I've talked to I've been at Benzinga for almost 9 years now. Over that period of time, I've talked to, let's say, 500, 700 companies, right? I mean, more than almost anybody. And I'll say that founders are absolutely not professional managers. The business that they build is driven by a mission. It's driven by a vision that's greater than themselves. And so the aspirations are so much higher. I've never heard a founder, unless I ask the question first, talk about, well, we're going to see 2% EBITDA margin expansion over the next 2 years. That's the type of talk that you get from a professional manager. And so if I had to bet between them, I like professional managers for a shorter term period, right? If I'm taking a 2-quarter, 4-quarter investment, again, longer term, but still short, professional managers hit their numbers. That's what they're built to do. They are very, very good at it. Founders don't give a fuck about the numbers, right? They care about the vision that they're building towards. And so if we're talking a 5, 10, 20-year time horizon, that's where I think investing in founder-run companies makes sense.
Yeah, and I asked that because, I think is Jack Dorsey still at the helm of Twitter? Is he still the CEO, or they have a different CEO, but he's still on the board? I know Snapchat.
No, Jack Dorsey is still a Twitter. Drew, can you run us a quick fact check on that one?
Yeah, I'm doing that right now.
I know Evan Spiegel of Snapchat, their founder or the company's founder, is still the CEO there. So that's what I'm saying. Is like Evan Spiegel started Snapchat as an app, right? While he was at Stanford for so he's been doing He lives, eat, and breathes Snapchat for the last 10 years. I just don't see that he's gonna let it fizzle out.
It is Jack Dorsey. He's still a CEO.
But he wasn't. He left for a while.
Yeah, he left and came back. It was kind of like a Steve Jobs thing.
He was really focused on Square, if you guys remember. Right? That was kind of the big.
Do y'all remember Snap glasses?
Yes,
all
Snap
you out
goggles.
there.
One just came out.
Everybody bought Snapchat when they came out with the freaking glasses. It was an Internet of Things play. Yes. I was not a buyer on that news.
They tried to. I think they recently
huge write down.
They have a new a new version of this that has more like augmented reality and stuff. I think they're giving it another go.
All right, I hope they don't look like this.
Yeah, that was. And
they sold them through vending machine. There's a lot of issues with that launch.
That was bad.
Doximity still waiting on the open here. Again, guys, if you're just joining us, we did talk to Doximity's CFO. First interview she did on the day that the company is going public. Right now, we have the indication the stock is looking to open between $40, $40.10. That's coming from the Benzinga Pro news team. Can you put a link to Benzinga Pro in the chat, please, producer AB?
Yes, sir.
IPO price at 26, so it's going to be a good day for that stock. All right, last thing that I want to talk about, unless anybody in the chat has anything we should make sure to do, I want to talk about Celsius. I stopped at 7-Eleven on my drive in. I've been doing this almost every morning for the past few weeks. I stop at 7-Eleven every day, okay? I bought the 3 for $5 Celsius deal again. I got hooked on the product. And so it's making me take a hard look at the stock. When I was in Miami a couple weeks ago, Celsius was everywhere. I think Michigan is probably like a later market for them. But Celsius was everywhere. So I just want to run some quick math on the numbers on this thing. So let's pull these out. I just want to get my ratios basically. So we have a market cap of, what did that say? 4.3 billion. Let's zoom in here. All right, so we have the market cap. Let's do it. Let's run EV to EBITDA because they might have debt. We have an enterprise value of 4.3 billion. All right, there's that. I want to look at what sales are. So let's look at TTM revenue. Let's look at guided revenue if they have it. Let's see if we can get TTM EBITDA. That'll give us a good place to start when thinking about a valuation for this stock. So all right, I'm going to zoom us over. We're going to start in our Benzinga Pro calendar to grab this TTM. Wow, that's small. Holy crap. All right, TTM revenue. We have, what does that come to? 150 million. Let me just copy these and sum them in Excel real quick. All right. All right, so TTM revenue, that's 1.5 billion. Did I do that right? Oops. We got to hard code that value in. All right, so TTM revenue, 152 million. Holy crap. All right, do we have guidance on this stock is the next thing that I want to look at from a valuation perspective. Does the company tell us how much money they expect to make? They don't. So we have no guidance from management as to how they think the stock is going to perform. And then let's look at profitability. All right, total operating income. So it's basically zero. Let's see, 4.5, 5.5, 6.5, 7, 8 million-ish of EBITDA. So we don't have anything there. NA, 8 million. So let's calculate some multiples off of these. So if we look at EV to sales, and we're going to look at EV to EBITDA. We're looking at, let's see. So, all right, EV to sales, 28. We look at, and Drew, while I'm doing this math, can you pull up the S&P 500 averages for me, please? We get an average S&P 500 EV to EBITDA an average EV to EBITDA is irrelevant. The company doesn't really have profitability, so we're just going to throw this one away. But we'll leave the number there since we calculated it. Will you give me an average EV to sales on the S&P 500? This is high, but not as high as I would have expected. We're at 28.2. What do you have for me, Drewski?
I'm pulling her.
If I'm better at the internet than you, EV to sales, SP 500 average. All right, I'm faster than you, Mr. Drew.
Yeah.
All right, average S&P 500 3.1.
Drew's got those college dorm room Wi-Fi's. It's not that quick. It's
Yeah,
not
that's
like
what
I
we're
gotta plug in my Ethernet cable. It's chilling next to me right now.
yeah. We'll get that figured out, Drew.
Yeah,
All right,
plug it
so
in.
that's TTM revenue. But let's say last quarter revenue. Let's do it something there. Last Q revs. So they did 50 million last quarter. Let's say if we were to take that and just run it out over the course of a year, that's 200 million a year. So let's just run a quick number on that as well. And we're down to 21.5. It's still high. So due to these multiples, again, we're talking about a stock that has TTM EV to sales ratio of 28, S&P 500 average of 3.1. Obviously, this company is growing significantly faster than the S&P 500. If we look on a year-over-year basis, we're looking at 100% revenue growth, 28 million to 50 million. Damn near 100%. So here's what I'm going to say on this one. First things first, I'm going to throw this one out to Zinger Nation. And again, fan of the product, third one of the day. But if you guys like this stock, not Celsius as the product, but if you like the stock, drop me a 1 in the chat. If not, drop me a 2. I'm curious where everybody is at with this thing. And then the second thing I'm going to say is I want to talk to either the company or I want to talk to our good friend and investor, Jonah Lupton, to hear their perspective on growth and how big sales are actually going to get. So before I invest, I'm sitting on the sidelines until I talk to somebody who knows the company much better than me. So Zoltan, if you are out there listening to the show, we want to get Celsius. Can you work on booking Celsius, either their CEO, CFO, or COO on the show tomorrow? And producer AB, I'm going to kick it to you and say, can you see if you can get Jonah Lupton on us for a Friday?
Friday's tomorrow. Yeah, I'll see if we can do that.
Jonah Lupton is a strong guy. He can bench 225 for 30 reps.
We also talked about Celsius.
I can do it. I tried it after he was on the show. We asked him how many times he can bench 225. He said 30. I tried that night. I got 4. Okay. It's a pretty strong guy.
Yeah. 25 is not bad at all.
We also talked about Celsius with one of the Nigerian brothers, Luke.
Oh, that's right. Who was it? Peter John? I don't remember.
That's a great question.
All right, so maybe we can bring
really good questions, Luke.
Maybe we can bring the Nigerian duo onto the stream as well, and we can talk more options trades.
Yeah, let's do that.
All right, Mike Wisdom in the chat saying he owned Monster for decades. People thought it was too expensive too. Yeah, it's an interesting point. Monster is absolutely a comp.
I think Monster is like the best performing stock since 2000.
What multiples does Monster trade at? And does Monster still have sales growth? So year-over-year sales growth at Monster is about 20%, 22%. Not that crazy. We look at EV to EBITDA. So we have 49 billion of enterprise value. Trailing 12-month sales are what? 4.5 billion, 4.8 billion. So let's just do a quick comparison on Monster versus Celsius. So Monster, we have 49 divided by, what did we just say? 4.8. Okay, so Monster's trading at 10 times EV to sales. So that actually makes me feel a lot better about this Celsius play. If Monster, and here's a 1-year chart of Monster, if Monster can sit at, and this is a company, an old company that's been along for a while, if Monster can sit at 10 times EV to sales, you have Celsius is only at 21 if we were to take that most recent quarter out 4 quarters. I think it's interesting. What were you saying, Drew?
Yeah, I mean, what AB said is like dead on. Like you look at it 2000, it was like 30 cents or something. Monsters ran to like.
Here's a 10-year chart of
max.
Monster. Let's
Look
go
at
further
the
out.
max from 2000.
All right, here's a max. So
No.
here's 1995. I mean, it was a dead stock until 2004. Holy
Yeah.
shit.
That is pretty crazy. I haven't seen too many charts like that.
Shout out
But-
Monster Beverage. I don't really
Also-
drink Monster. I did buy a Rockstar last night. I am a Bang
Yeah.
loyalist. The Bangs just hit different.
So I got to run after this, but Monster's market cap is around 50 billion. You know, Celsius trading on 5, like a 10x potential, pretty solid there. And I think Celsius honestly has a larger reach, right? I worked at Beyond Juice before I worked at Benzinga. I don't know if anyone knows what Beyond Juice is, a local Detroit juicery. And I would have people come in all the time and buy a Celsius. We sold out of those things like crazy. I didn't even know what they were. So it's a healthier brand, and I think that's the way that energy drinks are going. So I kind of like
Drew,
it.
are you in your college housing right now?
Nah, I'm actually at home.
All right, never mind. I had an experiment for you to run. It's coming out of the chat, the idea. You can see it on the screen. It's going to say if you're partying it up this weekend, let's run the experiment and see how it goes over, but disappointing again.
Yeah, Mitchell in the chat also asked, does Celsius have alcohol in it? No, it does not, but who knows? Maybe they will put out a seltzer White Claw-esque drink.
They need a booze CBD drink. Then the stock goes to 100, okay? They just need to announce they're considering it, and the stock goes to 100.
Yeah, exactly. Just it's something the board is talking about, and the next thing you know, the stock is up 20%. All right, guys. Anything else? We do have Get Technical coming up with Neil Hamilton.
Get Technical sucks. Just kidding. I got a stink eye from producer.
Oh my god! All
Get Technical, awesome show, guys. If you're technical traders, you like charts, you want more ideas, stay tuned right here. It's going to redirect you. Tell Neil that Mr. Luke sent you. After trading, I'll be back at it tomorrow at noon. We're going to try to talk to a Celsius exec or a Jonah or the Nigerian. Somebody give us more.